Hello friends, how are you? I hope all of you are doing really good. So let's continue with our discussion on overhead costing that we have been doing, and we are done till illustration number 13. So we have to continue from illustration number 14, and I hope all of you are enjoying this. All of you have understood easily whatever we have covered so far, right? So none of the questions are really too difficult if you are clear on your concepts. That is very important. If you are clear on the concepts, then everything is easy. There are only small points that you need to be careful about in the examination. Okay, so let's continue with illustration number 14. AT Limited Engineering Company having 25 different types of automatic machines, 25 different types of automatic machine, furnishes you the following data for 2016-17 in respect of machine B. So in respect of a particular machine, the data is given. Cost of machine is given, that is 50,000. Life is 10 years. Scrap value is nil. Now this information is given for the purpose of depreciation. One thing is very clear, right? Then the overhead expenses are given. The factory rent is 50,000 per annum. Heating and lighting 40,000. Supervision 1,50,000 per annum. Reserve equipment of machine B is 5,000 per annum. Area of factory is 80,000. Area occupied by machine B. Now, when he is talking about factory rent, heating, lighting, supervision, it is for all the 25 machines. It is not for a particular machine B, right? Because the factory rent is being paid for the whole factory. In the whole factory, there are 25 machines. So this expense is for all 25 machines. It is not for one machine. Clear? So do not confuse with the above line that this whole information is regarding machine B only. So factory rent is for the whole machine. Heating and lighting, supervision, reserve equipment is specifically given for machine B, that this is the cost for machine B only. Then area of factory is given. Then he says wages of operator is rupees 24 per day of 8 hours, including all the fringe benefits. He attends to one machine when it is under setup and two machines while under operation. So during the setup time, he is attending to one particular machine only, but during the operational time, he is attending to two machines simultaneously, right? Then he says estimated production hours is 3,600 per annum. Estimated setup time is 400 hours. So total is 4,000 hours. 3,600. Be very careful now here with the interpretation. He is saying 3,600 is the production hours, that is during which the actual production is taking place. During the setup time, there is no production that is taking place. So setup time is 400 hours per annum. Power is 0.5 per hour. Right? Now be very careful with the power. The power is not consumed during the setup time. Power is not consumed during setup time unless otherwise stated. Now if the question specifically states that the power is consumed during setup time, then you have to take it as consumption. But if the question is silent, then you have to assume it that the power will not be consumed during the setup time. I've told you that in the conceptual lectures also, right? So he says prepare a schedule of comprehensive machine hour rate and find the cost of the following jobs: setup time and operation time. Now basically this question is on two-tier machine hour rate, where you have to calculate the machine hour rate for the operation time and you have to calculate the machine hour rate for the setup time. So this type of a question is known as two-tier machine hour rate, right? So this question is on two-tier machine hour rate. Clear? When you have to calculate the machine hour rate for the setup time also and the machine hour rate for the operational time also. That means two machine hour rates you have to calculate, because when you will be calculating this machine hour rate for this particular job and this particular job, you are given two different times. One is setup time and another one is operation time, right? So for setup time, you have to calculate the machine hour rate for setup hours, then for operational hours also. Let's see the solution now. Computation of machine hour rate when the machine is in operation. Now, which of the expenses or which of the overheads will be incurred when the machine is in operation? The depreciation will be charged? Yes, sir. Factory rent will be there? Yes, sir. Heating and lighting? Yes, sir. Supervision? Yes, sir. Reserve equipment? Yes, sir. Right? So, everything will be incurred. Now, rent of 50,000. Now, as I told you, this is for 25 machines and the rent is based upon the area of the factory. Now, it is given that the total area is 80,000 and the area occupied by this particular machine is 3,000 square feet only. So, rent for this particular machine B will be bifurcated in this ratio. So, that is 3 by 80. Clear? 1875. Same is the case with heating and lighting. Heating and lighting is again dependent upon the area. The bigger the area, the more will be the number of lighting that will be required, and the smaller the area, the less will be the lighting required. So again, it is being divided on the basis of area, right? So 40,000 into 3 by 80. After that, supervision. Now, supervision cannot be done on the basis of area. So what we have done is we say this supervision expense is for 25 machines and we need to calculate it for one machine. Right? So for 1 second, guys. So 1 divided by 25 into 1,50,000. Reserve equipment, it is specifically for machine B that is given to you. It is specifically given that this is for machine B, 5,000. So total standing charges divided by 4,000, that is the total hours. As I told you in the last lecture also, that standing charges are divided on the total hours, whether there is setup, whether there is maintenance, because they are irrespective of the running of machinery. Right? Rent is not dependent upon the number of hours your machinery is running or machinery is under maintenance or machinery is under setup. It is not dependent upon that. Right? So they say take the total hours, whatever is the total hours of the machinery, you have to take that for standing charges, but you can take the running hours also, the effective hours basically. Right? So in the question, one thing you need to be very careful about is this, it is given production hours. That means this 3,600 is your effective hours. Otherwise, in the question, total hours are given and we have to calculate the effective hours. But here, you are given the effective hours and you have to calculate the total hours. So, language of the question needs to be very carefully interpreted. Now, machine expenses, depreciation you can calculate, it is given. Right? No issues. How the depreciation will be calculated? 50,000 minus scrap value is nil. 50,000 minus scrap value is nil divided by 10. So that will give you annual depreciation, that is 5,000, and annually the machine is running for 3,600 hours. So you will get the per hour depreciation 1.39, right? 1.39. This is per machine hour depreciation. Similarly, when he is talking about the wages, now what is about the wages, sir? He says for 8 hours you are paying 24 rupees. Right? For 8 hours you are paying 24 rupees. So for 1 hour, what is the amount of wages being paid? 3. Any doubts? Now the second point he says, when the machine is in operation, the operator is looking at 2 machines. He is handling 2 machines, right? So that means this 3 rupees is for 2 machines during operation. So for 1 machine, what will be the expense? For 1 machine, this cost will be 3 divided by 2, 1.5. Clear? 1.5. 25 by 8, this will give you for 1 hour, and 1 divided by 2, because during the operational time, the operator is looking for 2 machines, right? He is attending to 2 machines, that is why, and we are calculating the machine hour rate for 1 particular machine, so divided by 2. Power, it is given per hour 0.50, so machine hour rate is 6.98. So this is the machine hour rate when the machine is in operation. Now you need to calculate the machine hour rate during the setup time. Under setup, rent will be same, sir. right? Heating, lighting, same sir. Supervision, same sir, no issues. Reserve equipment, same. Total, same. This is same. Now machine expenses, depreciation will remain same. There is no issue in case of depreciation. Power, will the power be consumed during the setup time? I told you that the power will not be consumed during the setup time until and unless otherwise specified. If the question specifically says that the power is consumed, then you have to take it as consumption. Otherwise, the power will not be consumed during setup time, right? So what he has done is power is 0. Now coming to wages. For wages, he specifically says 3 rupees is the per hour rate. Now he says during the setup, that person is attending to one machine only. So that means here you will not need to divide it by 2. You will take 3 rupees. That is the total value, 3 rupees. 24 divided by 8. Clear? Because he is attending to one machine during the setup time. So machine hour rate during setup time is 7.98. This is during the operational time and this is during the setup time. Now you can calculate the machine hour rate for these particular jobs. Job 1101, 1102 and 1308. Setup cost. Job 1102, what is the setup hours multiplied by the setup cost per hour? Right? Similarly for 1308, hours multiplied by the cost overheads per hour. So this will give you the total. That is why we have calculated it separately. The setup hours, this machine hour rate for the setup time and machine hour rate for the operational time is being calculated separately. Similarly for operation cost, operation hours multiplied by the rate, operational hours multiplied by the rate. So total cost of the job you will get. Clear? So this is a very good question, very important question from examination point of view. This is a 2-tier rate question basically. Let's move on to illustration number 15. Ganges Printing Company has 3 operating departments: printing and binding, lithographing and engraving. The company has a job order cost system using a single predetermined expense rate. The management has been made aware of the deficiencies of using such a rate and is now interested in departmentalizing the factory overheads. Now, what this company is doing is, for all the different departments, they are following just one single rate. We studied about the blanket rate. So they are following that blanket rate method. That if printing and binding, the overheads are being absorbed on the basis of material. In the lithographing also they are being absorbed on the material, and in engraving also they are being absorbed on the material. There is no different method according to the departments. They are following a single factory blanket factory overhead rate. Clear? But now the management has been made aware that this is the wrong approach. You have to change it. You have to departmentalize it. You have to absorb the overheads according to the different departments. So for that, there is a study that reveals that Department 1 has 3 similar machines representing a large investment and calling for high repairs and depreciation charges. So one thing is very clear, that talking of the department number 1, this is a machine intensive department where the machines perform the major part of the work. It is more dependent upon the machines. It involves a huge investment on the machines, right? And department 2 has the workers perform the similar task and are therefore paid the same hourly rate. Now this department is majorly dependent upon labor. Department 3, however, has several classes of worker. In the Department 2, all the workers are doing the same task and they are being paid at the same rate. But in Department 3, the workers have the several classes, each group being paid the same hourly wage rate. Now, he says in the Department 3, there are, let's say 3 types of groups. Right? Group 1 worker, Group 2 worker, Group 3 worker. Let's say this is skilled, this is semi-skilled, and this is unskilled worker. Now skilled workers are being paid at the same rate. Let's say 10 rupees, this is being paid at 8 rupees and this is being paid at 6 rupees. Right? This whole group is being paid at the same rate, but in the department there are different rates which are existing. Because of the different groups, one group is getting the same rate, but in the department, because there are multiple groups, So if we look at it from the department point of view, there are multiple rates. There is 10 also, there is 8 also, and there is 6 also. But in department 2, there is one single rate. Okay. The estimated factory overhead and production data cost are as follows: factory overhead, direct labor hours, labor cost, and the machine hours, which are given to you. An analysis to advise the management regarding the type of rates to be used in these departments, a computation of the rates recommended. Now, let's see the first department. First department, as I told you, is machine intensive department. So on what basis you can absorb the overheads of the department 1, that is printing and binding? Yeah, department 1 is printing and binding. If it is machine intensive, whether it should be done on the basis of labor or machine, it should be done on the basis of machine, sir. Right? It should be done on the basis of machine. It is appropriate to use the machine hour rate method of absorbing the overheads in department 1 because there is a large investment in the machine and therefore they are predominant. So overhead rate per machine hour is 40,000 overheads divided by machine hour, that is rupees 2 per hour. So we have calculated the rate also as required in requirement 2 and we have advised the right method of absorption also. Now in department 2, it is better and appropriate to use the labor hour rate of overheads because all the workers are paid at the uniform wage rate. So you can pay according to the direct labor hours. Per hour rate, you can calculate the per hour rate and simply multiply it with the working hours. Clear? So it will be 68,750 divided by 20,000, 3.4735. Now in the third case, again it is a labor intensive one. Again it is a labor intensive, but the problem here is that in this case the multiple rates exist. So what you can do is you can calculate it as a percentage of labor cost. So whatever the labor cost will be of the department 1, we will pay as a percentage of that. We cannot use the labor hours directly here because what will happen in case of labor hours, you will get a single rate, right? Then this department and this department will get the higher rates. Clear? So the third one, in the department 3, it is better and appropriate to use the overhead rate based on the certain percentage of the wages because the workers are paid at different rates. So whatever the rate they are paid, you have to calculate the percentage of that rate only. So they will not be paid at a higher rate. They will get whatever their wages are. Accordingly, the percentage of that will be calculated. What is if we go by the labor hours here, in case of labor hours, we will not be calculating on that. We will be calculating a single rate, right? So the unskilled worker will get more wages as per this rate. So overhead percentage on the wages means the wages cost, right? So 1,20,000 divided by labor cost, that is 80,000 multiplied by 100, 150%. Right? So this is a good question for understanding purpose. For the conceptual understanding purpose, whatever we have covered, it is a very good question on that. Let's move on to illustration number 16. Again, very simple question. For a department, the standard overhead rate is 2.50 per hour and the overhead allowances are as follows. Activity level 3,000, overheads 10,000, activity level 7,000, overheads 18,000, activity level 11,000, overheads 26,000. Calculate the fixed cost. The standard activity level on the basis of which the standard overhead rate has been worked out. So you need to calculate in the second part, he is asking you to calculate the number of units, that is the activity level, hours, not units, number of hours, that is the activity level where your standard overhead rate will be 2.50 overhead rate per hour, right? But the first thing, you need to calculate the fixed cost from this particular data, right sir? How do you calculate it? For that, the first thing that you need to calculate is variable cost. Now we say if the activity level changes from 3,000 to 7,000, right, there is a change of 4,000 rupees with the 4,000 hours, sorry, with the change of 4,000, your budgeted overheads are increasing by 8,000 rupees, right? That means this 8,000 is a variable cost for 4,000 hours, isn't it? Right? If the cost is increasing, that means that is a variable cost. The fixed cost doesn't change. So for 4,000 hours, my cost is increasing by 8,000. So that means this 8,000 is my variable cost for 4,000 hours, right? So can you tell me the variable cost per hour? Variable cost 8,000 divided by 4,000, that is 2 rupees per hour. 2 rupees per hour is my variable cost. 2 rupees per hour is my variable cost, right? Now, how can I calculate my fixed cost? Let's consider this activity level of 3,000, right? Activity level is 3,000 hours. Now, if your variable cost at the rate of 2 rupees per hour, so what is your total variable cost? Your variable cost here is 3,000 hours multiplied by 2 rupees per hour, that is 6,000 rupees. What is the total cost? Total cost is 10,000. So out of 10,000, if 6,000 is your variable cost, what is your fixed cost? What is your fixed cost? That is 10,000 minus 6,000. 4,000 is your fixed cost. Any doubts? 4,000 is your fixed cost. Clear? So variable overhead rate per hour, first you have to calculate what is the variable cost per hour. Then multiply that variable cost. See, this information that is given, this is basically your semi-variable cost. This is basically what? This is your semi-variable cost. So you have to find out of the semi-variable cost, because see, as you change the activity level, the cost is increasing, but it will contain some part of a fixed cost. So you have to divide the semi-variable into fixed cost and variable cost. So fixed cost is 4,000. Now it says calculate the standard activity level at which the rate has been determined. So standard activity level will be fixed cost divided by fixed overhead rate per hour. How will you calculate the fixed overhead rate per hour? Sir, total overhead rate. What is total overhead rate? That is given as 2.5. And we calculated that variable overhead rate per hour is 2 rupees. So what is your fixed overhead rate? What is your fixed overhead rate? That is total 2.5 minus 2, that is 0.5. So if you divide the fixed cost by fixed overhead rate per hour, that will give you the total hours, that is the activity level. How? Just listen to it very carefully. Let's say my activity level is X, right? At X activity level, that is for X hours, if I multiply the overhead rate per hour, that is 0.5, what I will get? Total fixed cost, that is 4,000. Right? So if you want to calculate the value of X, that is 4,000 divided by 0.5, that is 8,000. Clear? So this is a very good small question, very good question. For small purposes, if the question has to come for 3-4 marks, then it is a good question on that. Right? Okay, sir, let's move on to illustration number 17. In a certain factory, 3 products are made from different materials by similar process. For a typical production period, the costs are given as material used is given, direct labor cost is given, overheads actual are given, right? Then he says the overhead is charged to cost. Charged means it is absorbed. Absorbed, actual is given, overhead actual is given, absorbed on the basis of 25% on the prime cost. What is your prime cost? Prime cost is direct material plus direct labor plus direct expenses. Do you see anything wrong in the principle in this method of charging the overheads? If so, suggest a preferable method. Do you see anything wrong that they are charging it on the prime cost? See, in the very first line, they have given a very big hint. They say all these 3 products are being made from the different material. Right? So that means in this case, what is the dominant factor? The dominant factor is the material and not labor. Right? But when we are talking about the prime cost, if the absorption is being done on the prime cost, then that means both material and labor are the dominant factors in that. But he says the appropriate method is that you should calculate it as a percentage of material, because all the three products are made from a different material which will be having the different cost. So the dominant factor here is material. Since the different materials are used for producing the product, it is advisable, preferable, and appropriate to use the method of absorbing the overheads based on percentage of material instead of percentage of prime cost, which is shown as follows. So material cost is given, labor cost is given, prime cost, overheads. The value of overheads is given to you so that you can calculate the percentage on the material, right? So this is the value of overheads that they have calculated. So percentage of overheads on material cost, what will be the percentage? If it is 25% on prime cost, what will be the percentage on the material cost? So 700, that is the overheads divided by material cost into 100, 43.75% of the material cost. So B, 750 divided by 2000 into 100, 37.5% of the material cost. Similarly for C, 37.5% of the material cost, right? So this is how you have calculated the percentage of overheads on material cost. First we calculated the overheads as given, that is 25% on prime cost. Now we say if it is 25% on prime cost, what is the percentage of that overheads or to the material cost? Because the material is the dominant factor in this one, right? Any doubts in this thing? Now let's move on to question number 18, illustration number 18. Yes, let's do it. We have some time. A company produced a single product in three sizes A, B, and C. This is not a simple product. This is a single product. Prepare a statement showing the selling and distribution expenses apportioned over these three sizes, applying the appropriate basis for such apportionment in each case. From the following particulars indicated, express the total of the cost so apportioned to each size as cost per unit sold, right, nearest paisa, and a percentage of the sales turnover nearest to two places for decimal. So first you have to calculate the total cost. You have to apportion the cost on the reasonable basis. The expenses are given and the basis of apportionment are also given, sir. Very simple. Sales salary 10,000, direct charge, sales commission on the basis of sales turnover, sales office expenses on the basis of number of orders. Then this is advertisement, journal, sales turnover, advertisement specific, direct charge. Whether it is advertisement, yes, seems like advertisement. They are using lot of short forms. I don't know. Packing, total volume, cubic feet, product, cubic feet of the product sold. Delivery expenditure 4,000, again on the basis of total volume. Warehouse expenses, again on the basis of total volume. Then expenses, credit collection on the basis of number of orders. Data available relating to the three sizes are as follows. Number of salesmen, all paid the same salary. They are given. Unit sold, number of orders, percentage of specific advertisement is given, sales turnover is given, and the volume of cubic feet per unit of the finished product. It is for 1 unit that is given volume. Why I am emphasizing on this? Because we need to convert it for the total number of units. Okay. Okay, let's see. First we will have to bifurcate, that is apportion these expenses on the reasonable basis. Sales salary, direct charge means on the basis of number of salesmen. So sales salary is 4:5:1. That is 4:5:1. That is on the number of salesmen. That is a direct charge. Direct charge in this case is number of salesmen. Right? Then sales commission, it is to be distributed on the basis of sales turnover. So sales turnover is given 58:80:62, right? Sales office expenses, similarly the sales office expenses, that is on the number of orders. So number of orders are given to you, that is 7:8:1. 7:8:1. Now advertisement, journal expenses on the basis of sales turnover. Then specific direct charge, again direct charges, number of salesmen, right? Direct charges, number of salesmen. Then packing is to be distributed on the basis of total volume cubic feet of the product sold, right? Total volume of the product sold. Now Here you are given the volume per unit and you are given the units sold. So can you calculate the total volume here? Yes, sir. Total volume will be units sold multiplied by the volume per unit. So he has made a working note regarding that. Volume per unit 5, 8 and 17. Number of units sold that is given to you. So this is the total volume of cubic feet. 17,000, 32,000 and 51,000. This is the ratio in which it is to be bifurcated. Packing, delivery, warehouse. Then credit collection. Credit collection is on the basis of what? Number of orders. Right? So this is how you will get the total cost of all the three sizes. Right? Now he says, once you have calculated the total cost of all the three sizes, you need to calculate the cost per unit sold. So cost per unit sold is total cost divided by the number of units sold. Any doubts? Right? So first you need to calculate the total cost. Total cost per unit sold is divided by number of units sold that is given to you in the question. Now, while calculating total cost, you have to use the reasonable basis as given. Now, in this question, one thing is easy, that they have given you the basis of apportionment. That is quite easy, right? Otherwise, you will get confused that which expense is to be divided on which basis. In this question, definitely it is not possible, to decide one reasonable base on our own. The second thing that they have asked for is one, cost per unit sold, right? Second, it says a percentage of the sales turnover. Cost as a percentage of sales turnover. So cost divided by sales turnover multiplied by 100. So cost as a percentage of sales turnover, right? So this is your sales turnover. Sales turnover, sales turnover, sales turnover. Clear? So this is a good question, a small question, but a good one. So we are done with illustration number 18. Now we are left with two illustrations. Illustration number 19, which is a very good question, very interesting question. Then illustration number 20, a small one, easy one. And there is a mistake in illustration number 20. I'll tell you that what is the mistake and how it is to be done. Right? Then we will move on to our practice problems. Right? So we will continue it in the next lecture from illustration number 19. See you guys in the next lecture. Till then, stay safe, stay healthy, keep studying, keep sharing. Thank you so much.